Hi guys, this is Andrew from Trading Mastery and welcome to today's trading tip. And in this video, we're going to stay with the charts this time because there's a couple of businesses in a few industries that I want to touch on that are likely going to handle these current inflationary fears better than most. And I'm talking about the banking industry. I'm also talking about the credit card industry. Now, we did see on Wednesday, US inflation figures for the month of October were the highest back-to-back over a number of months since we've seen since 1990. So October inflation figures in the United States year on year rose 6%, which is substantially higher than what we would ordinarily like to see. And this has put the Federal Reserve in the United States in a difficult bind because it's currently winding back a stimulus program. It's saying that it doesn't want to put interest rates up until the end of next year, but maybe it might be forced to do so before then. And if interest rates are higher, that is likely going to eat away at company earnings. And of course, share prices follow company earnings. I've been talking about all throughout the course of 2021, making sure investors have some exposure to banks because interest rates globally right now are zero. They are likely going to go higher over the course of the next few years, and banks have higher operating margins when interest rates are higher. And as you'll see here, Bank of America, particularly in the US trading session, whilst the likes of Apple was down 1.8%, Amazon was down 2.6%, Alphabet was down 1.7%, even Home Depot and Walmart were down between 0.5% and 1%. Bank of America was up 0.75%, and Wells Fargo, in fact, was up 1%. Why were these banks higher and everything else lower? Because the traders are pricing in the expectation that interest rates are likely going to be higher at banks in the United States at some point in 2022, and therefore their profit margins are going to be higher. Now, these are a couple of companies that are trading towards their current highs. I want to show you a couple of businesses now that have recently been trading well off their highs, in fact, down around 15% or more from off their highs, and are likely going to benefit over the course of the next 6 to 9 months as consumer spending does not slow down. Consumer spending may go into different products and services depending on inflation, but generally speaking, US consumers are richer than they've ever been, and they're not likely going to stop spending. They may likely spend a little less on a few different products, maybe not go out for dinner or the movies, but they're likely going to spend on important items, groceries, fuel, etc. MasterCard right now is trading at $357, and it was trading back up here at around about $395 just a few months ago, and is currently trading 10% lower than that level. Another one that is also going to likely benefit over the course of the next 6 to 9 months is Visa. And you can see here with respect to the price formation, it's a little similar, and it's been trading down recently also around 14%. So there's two businesses. We'll take a look at them again in early 2022, but I can tell you right now, if banks continue to move higher, I'll be very, very surprised if Visa and MasterCard don't move higher as well. Keep in mind this simple rule of thumb. As interest rates go higher, banks make more money. Share prices follow company earnings. Earnings have been very strong with a lot of businesses in the US through 2020 and 2021, particularly in the tech sector, and those exposed to COVID in a positive way, such as Amazon, etc. Those businesses will do well over time, but in the shorter to medium term, the businesses that have been trading at weakness, such as Visa, MasterCard, and even some of the banks, when you look at Wells Fargo and see where Wells Fargo is trading right now compared to where it was trading just a few years ago, it is still trading down from the pre-COVID levels. It was trading at 54, still not even back to that level yet, still trading at 50. So if interest rates go higher, the probability is we're going to see banks go higher. I've been encouraging investors around the world to make sure they have at least one or two really top-notch, good quality banks in their portfolio, particularly US banks, and those of you down under here in Australia, Australian banks, and those of you, my clients, know our preference with respect to that. Have a wonderful day. Look after your risk management. And until next time, happy trading.